I know moving averages are lagging indicators. The line is plotted based on the average of the previous bars. So in the case of a 100 period moving average, we will take into account the last 100 bars. Or whatever the time frame. If it's a 4-hourly chart, it will take into account the last 100 4-hourly bars. Now this again, together with the Heikin-Ashi, gives us that smooth look on the chart. For trend trading, smooth, clean and easily identifiable trends are key. The exponential moving average uses exactly the same principle as the simple moving average, except that it applies more weight to the most recent price bars. By emphasizing recent action, the EMAs reduce lag. So the 633 period moving average, this is used on the weekly and on the daily chart for dynamic support and resistance, and also for targets and entries. So it's a multiple purpose line on the chart, and when there is confluence together with a support equals resistance, this becomes a very powerful line on the weekly and the daily chart. Now, I also use the 633 on all other time frames for the same purpose, but it's best used on the weekly and the daily. The 200 period moving average, this is also used on the weekly and on the daily for targets and entry and for dynamic support and resistance. So say for instance we are trading below the 200 period moving average. Prices are coming up toward it. Very good idea to start looking for manipulations in this area, especially if there's a confluence of events, support equals resistance, or if you drop down to the lower time frame and you see that the same line is being respected again on a lower time frame, that becomes extremely powerful to act at that level, to go short. Look for shorting opportunities below the 200 period moving average, and anything above the moving average, look for long opportunities. Then for the exciting stuff, the 36 period moving average. We use this on the lower time frames, on the 4-hourly, on the hourly, also on the 15-minute. This is a dynamic trend following EMA. So if it's difficult for you to draw any trends on your chart, then it is a very good guideline, the 36 period moving average. Try and draw your trend lines as close as possible to the 36 period moving average, then your chances of that trend being a true trend is much better. And then even more exciting, we have the 12 period moving average. This is also used on the 4-hourly, and on the hourly and on the 15-minute. We can also use this on the daily and the weekly, the same as with all the moving averages that I'm showing you. It's just that the 12 period is used best on the lower time frames, and we use this to identify volatile trends. So prices are coming up to this level, and then we look for shorting opportunities, and prices are coming down into this level, we're looking for long opportunities. So these 4 indicators are very powerful in identifying the long-term trend, and then most importantly for riding out this trend right up until the end.